So Maria, thank you so much for joining me here today.
Thank you for having me, Lily.
I wanted to maybe start off with, what your outlook is for 2026. I've been hearing, this is going to be another record-breaking year in terms of issuances. What do you think is driving the growth?
Yes, I was moderating the panel last year on the transatlantic transactions, and the volume has increased 41% year on year. As you said, it was a record-breaking growth last year. It's massive at 177 billion pounds of USPP issuance. I think what is driving the growth is more and more borrowers are looking to diversify either from banks or from public markets. Private markets are seen as a lot more resilient, with investors sort of always providing liquidities for types of transactions that are out there. As well, there have been a number of mega deals, sort of, 5, 6, 7 billion, like Intel, for example, or RWE or ADF coming to the private market, which hasn't been the case before. Usually they would go to listed bond market. And then a lot of long-term borrowers driven by CapEx requirements and investments in utilities, transport space, data center, which is obviously technology boom driven. So all those borrowers need a lot of capital, and that's definitely the place to be. So I think the 2026 is going to see the same amount of issuance, if not more, just coming from these sectors. In our client base, which is largely sort of UK and EU driven, in utilities and airports and transportation, we see on the advisory side, their CapEx programs, and they are all in kind of tens of billions. One of the biggest ones is Heathrow expansion, for instance. So all this will need to come to bond, bank, and private placement market, but definitely private placement market is now very established, with more players coming in and market of choice for many long-term borrowers.
Right. And with so much changing and so much growth, do you see any challenges that investors and issuers will be facing?
Yes, I think sometimes the large-scale projects are getting delayed because obviously it involves a lot of sort of construction, supply chains, etc. So some of the deals sometimes get pushed back. We see it in some transactions that we are working on, that sometimes the time to market takes longer just because of the nature of this kind of the large scale infrastructure projects. Some of the parts of the market can get a little bit overheated. Depends on the expectations of the business plans in sectors like fiber or EV charging as well, where the adoption rates by consumer tends to be slower than sometimes anticipated. So you have either delays or sometimes stretched balance sheets in some parts of the sectors. But overall, I think the core borrowing remains very resilient and well capitalized.
Yeah, and that's always good news, isn't it?
Yeah, and then, all the infrastructure sectors are to an extent affected by regulation, which then you have the political risk, but that's a risk which is very hard to predict. So we find that investors still treat the processes as business as usual, because these risks are hard to sort of quantify, and they need to deploy capital. They want to invest in deals, so they make analysis point in time. And a lot of the borrowers which are coming to private placement market, I would say about 90% are investment grade. So there is sort of room for volatility in the business plans or in balance sheets. So overall, it's kind of a very resilient borrower base, often with the asset backing as well. So I think, it's a resilient market. So good to be in this segment.
Yes, it sounds like it, doesn't it? I finally wanted to maybe touch upon, how the issuer and investor relationship would change as a result of, these new opportunities and etc.
I think for now, a lot of issuers, they like to be close to investors themselves as well, especially to the larger ones, to hear directly rather than from advisors or agents, and to have direct communication just gives them more comfort, because as well as the capex, there is quite a lot of refinancing risk, because there's been more shorter term debts being issued in the market, given the sort of the interest rate repricing a couple of years ago. So that has given a lot of our borrowers kind of an opportunity to build closer ties with investors, because they want to know where the liquidity is going to come from in spite of volatility. So I think overall it's very sort of constructive and positive relationship between investors and insurers.
Amazing. Thank you so much for joining me today.
Thank you, Lily. Always great to see you.